Dear friends, welcome to PMS Insights. Presently, the equity markets worldwide are reacting to the news of the outbreak and spread of coronavirus. The market participants are rightly worried regarding the continuous escalation in the number of COVID-19 cases in several countries other than China, which could potentially lead to a broader global economic slowdown and loosening monetary policy. While the synchronized intervention of global central banks would help manage the asset prices, however, the slowdown in economic activity could be sharp and could last for a few quarters. In such turbulent times, when most global markets are down more than 20% in the last 1 month, it's important to take a step back and reflect and not be guided purely by emotions. As the legendary investor Benjamin Graham has rightly put, and I quote, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine," unquote. We believe that while the equity markets are driven by sentiment in the short term, long-term performance is guided more by fundamentals of the companies. Meanwhile, another important factor, the fall in crude prices by more than 30%, led by the OPEC supply shock, bodes positively for India, as India is overtly reliant on oil imports. As per estimates, for every $10 per barrel fall in crude prices boosts India's growth by 25 basis points and pulls down the headline inflation by 30 basis points. Against this backdrop, while we cannot predict the exact bottom of the markets, it still provides a window of opportunity into the stock markets for medium to long-term investors, as quite a few high-quality businesses could be available at good valuations amidst all the fear. Also, in the long run, the pandemic might propel investments in India's manufacturing sector as businesses across India and globally start reducing the dependence on China for raw material and components. Coming to the financial results for third quarter FY20, the earnings continued to be muted at operating level. However, corporate tax rate cut aided profit growth. The PAT growth for Nifty 50 companies was around 10%, driven mainly by financials along with consumer companies. Nifty Next 100 companies delivered operating profit growth of around 11%, which was in line with market growth, with about 73% companies delivering results above or in line with estimates, and about 27% companies missing their estimates. Companies which delivered very strong earnings growth for the quarter include AU Small Finance Bank, Apollo Hospitals, Alchem Labs, HDFC Life, and Aditya Birla Fashion, among others. The relatively conservative positioning of the portfolio has helped it to outperform during the phase of market correction. Going forward, the portfolio might benefit on account of decent exposure to very high quality companies with strong earnings growth visibility. Thank you.